All right, so we had Brad Gerstner from Altimeter Capital on our air yesterday. He said the pause, it gave tech CEOs, it gave tech companies a framework that will let them move forward and kind of ease some of the questions about what's going to happen next and ease a lot of the uncertainty. Do you agree with that take?
I mean, look, I think there's a framework, but the reality is that there's mass uncertainty. And I think you could still have 10 to 15% CapEx large purchases that ultimately significantly get downsized or at least get paused. And I think that's the issue here. I think tech is going to be very volatile going into earnings season. I think a lot of these companies either don't give guidance or give very general guidance. And I think that's just the reality of what's happened. You've set a storm in motion. We came off the cliff, no doubt, very positive for big tech. But we're still, I think, only a quarter way through this.
Well, I mean, absolutely. A lot of these stocks are still well off their 52-week highs. What do you make of the rally yesterday and the pullback today? Nothing really fundamentally changed from yesterday. Why do you think we're seeing such a sharp pullback today? We're looking at Nvidia shares down more than 3.5%, Microsoft pulling back about 1.5%. We're going to get to your Microsoft call in just a minute.
It's like being in a storm, and then you come out in a hurricane or a tornado, and you come out, what's the damage? The damage is real. I mean, uncertainty. I mean, we talk to so many out there in the field, in the U.S., in Europe, across Asia. And I think the reality is, like, this has created a lot of uncertainty for the tech world. But China is the hearts and lungs of the tech world. And those tariffs are going to continue to increase. And I think that's the worry here, is that you're playing with a third rail issue when it comes to China. And that's what, from Apple to Nvidia and the rest of the tech.
All right, let's get to your Microsoft call. You lowered Microsoft's price target from $550 down to $475. Part of your thesis is that tech spending, CapEx spending related to data centers and everything is pulled back 10 to 15%, and you're saying that's conservative. Why? I mean, the tariffs, if we're being fair, and Brad Gerstner pointed this out, they've only been in place for about a week, maybe 10 days, and we had some insight they were going to come. What has fundamentally changed so much that you think spending is going to pull back 10 to 15%?
CapEx plans are paused. I mean, from a large
But why don't they just restart? Isn't that the whole thing?
Because ultimately, it's like once you start that snowball, you can't just stop it. And when you look at it, it's still paused, but then it all comes down to China. China is the epicenter. How many companies are exposed to China? On the tech side, it was from when you think about shipping, what's coming in, parts. If a CIO ordered something, it's $100,000. Is now they paying another 100? Is it going to be double? So I think that's part of the issue. When it comes to Microsoft, and you'll see this with Google, you'll see with Amazon in terms of hyperscaler spending, I think it's paused a lot of what we're seeing.
Well, let me push back on you. You're saying it's paused, and you're saying it's primarily because of the China tariffs that, again, have jumped up to 125% right now. But if there's a deal made with China, the president seems to be very confident that he can make a deal. Does that change the whole outlook? Does that go back to boosting CapEx spending? And then how do the sector tariffs and the metals tariffs, how do those impact that?
Yeah, it's a great question. Well, first off, I think at this point, Street's going to look at June quarter is basically a mulligan. In other words, June quarter is going to be very, very soft. And I think investors will look to any sort of sign of a China deal and a de-escalation. To your point, the reason we haven't downgraded one tech stock, we've lowered target, is because, in my view, it's going to be the COVID playbook. You throw out 2-3 quarters, you look at 26 earnings, and you look at a worst best case, and that's the way that you pick the valuation of the winners.
Let me ask you something that I'm sure you're at least beginning to think about. So a lot of these big-time tech CEOs, they were at the inauguration. They've been going to meet with the president, and the president's been very proud to say that they're going to increase their spending, like Apple increasing its spending here in the U.S. If they pull back, does that raise the risk of them drawing like the ire of the president and maybe an administration that's not so friendly?
Of course, because the reality is all those projects that you're talking about in terms of Stargate and everything else and some of the app projects, how are you building that? Where is it coming from in terms of the products? I mean, it comes down, China is the epicenter. So it comes down, the unintended consequences here are key. And look, big tech, they're caught in the middle. And I think they are still trying to get their grasp.
Breaking news in the stock market. Nvidia and other technology product makers win a massive exemption from President Donald Trump's reciprocal tariffs. This exemption could significantly impact tech stocks and the broader market. With forecasts predicting a bullish trend for the stocks in question, now may be the perfect time to consider investing. Exciting developments are underway, and investors are eager to capitalize on this news. Let's get into all the details. Welcome everyone to Investocracy.
The goalposts move again tonight in President Trump's trade war with China, with smartphones, computers, flat panel TV displays, semiconductor chips, and other electronics now exempt from 125% tariffs the president recently slapped on Chinese imports, with 20% tariffs announced earlier still remaining.
You see this headline and think what?
Yeah, it's a stunning reversal.
CNBC's Steve Kovac covers Apple, a company hit particularly hard by the escalating trade war. The tech giant assembles 90% of its iPhones in China and lost nearly $640 billion in value in 3 days as President Trump ramped up tariffs on the country. Apple not responding to our request for comment as the trade war whiplash increases.
They still have to grapple with how much to charge. Do they increase their prices on their laptops and other devices in order to keep their margins safe? Or do they eat those costs? We're not talking about $3,000 iPhones anymore, but we're not out of the woods yet.
Opening the door that other industries could see their own reprieve, Trump signing the order exempting many electronics late Friday night with no public announcement. The president asked late Friday whether he's waiting for China to initiate negotiations.
I guess so. Whatever it is, it is. We have a lot of countries, not just China.
The president's about face on tariffs for key tech items comes just a week after one of his top economic advisors said this.
I don't think the word exemption is going to be a factor. I don't think that's such a thing.
Apple shoppers hoping this latest pivot keeps prices from soaring.
I feel like I shouldn't have to be checking the news every single day to make sure I can afford products that we've all been kind of accustomed to.
And while the new exemptions help big tech, they do nothing for small business owners like Anthony Burness, co-CEO of Kentucky-based The Cooler Keg. His stainless steel portable kegerator is made in China, and now he says too expensive to import.
We're not on the NASDAQ. We're not part of Wall Street. Main Street is the one that's actually getting hit the hardest. But we're looking at what do we do in the long run.
Maggie Vespa joins us live outside the Apple store in Chicago. Maggie, so back to the electronic exemptions. What do we know about the impact on prices?
Yeah, so Jose, analysts say they could still go up. Remember, those 20% tariffs still remain. How much prices go up, that, of course, remains to be seen, but we should know in the coming months. Jose.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.
Investors are looking optimistic as the stock market buzzes with news of tech giants being spared from hefty tariffs. Let's delve into the data behind this game-changing event. The exemptions signal a shift in the market dynamics, prompting a wave of optimism among traders. Analyzing the latest tweets, it's evident that market sentiment is overwhelmingly positive. Investors are applauding the decision, and industry experts are emphasizing the strategic implications of this move. Analyst Dan Ives sees this recent announcement as great for tech investors and is hopeful that the stocks will start performing bullishly moving forward. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Attenuated is business. Do you remember that when AWS was selling, they were worried about attenuated commitment of their clients. Attenuated, I'm going to add that to the, along with ill-advised, along with suboptimal.
I think you should. I like the word. But what it means is, hey, we're going to build it. We're going to build it now. We're not stretching out deadlines. Right. We're going to work. And again, as we said, Alphabet's saying the same thing. And so, I don't know, Jim, does that mean at some point we're going to get back to the AI trade, or is that kind of over and done with?
I think we're very, very much going to come back to it because the video has not been included yet. And video is high in, it's high in NVIDIA, dude.
You know, OpenAI's image generating app or bot or they added 100 million users at OpenAI. It's a private company.
And yet it's not even that good. They rejected half the stuff I sent them.
It was so expensive and it burned out so many chips so quickly, I think they want to stop it. I mean, what I understand is, 100 million users cost them 25 cents each image.
A Corey would be able to fix
Each
that.
image.
All the data center stocks are down. Okay, so David, I use ChatGPT, Grok, Claude, Gemini, and Perplexity. And Perplexity has leaped over Grok in terms of being able to do great things. But I tell Grok, listen, I want it in Jim Cramer mode, and they have been able to duplicate Cliff Mason, who's my nephew and my head writer, my only writer. So Grok is able to imitate you, but Perplexity is coming up with answers that are lightning speed. I mention all this because every one of these needs to spend more money with NVIDIA. Because, David, this is a winner-take-all, loser-take-none. We're not all going to just use every single one of these.
Well, that's a good question because, and you may say that's the case. Others disagree. In fact, I think Satya Nadella, and this is some time now in a podcast, said, no, given the scale of this, everybody's going to ultimately benefit and win, that there isn't going to be the winner-take-all.
Yeah, but I don't want one that doesn't update. We need, but if you get them.
And by the way, Jim, you keep talking about the consumer application, but really it's going to be the enterprise where the real money is conceivably made, isn't it?
NVIDIA chips will be exempt from the additional 125% reciprocal tariff placed on Chinese imports and the 10% imposed tax on other countries as well. While the original 20% import tariff on China still stands, the move made by the Trump administration may motivate China to remove its own 125% tariffs imposed on U.S. goods. The news is looking promising for both the U.S. stock market and the Chinese market. The Nvidia stock jumped 17.6% last week, coming back from months of a slumping stock and overall market. Moreover, Jensen Huang's dinner last week with Donald Trump, convincing him to allow the sale of H20 AI chips to China, has minimized restrictions. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
The Trump administration backing off of a chip crackdown on Nvidia. This is coming after CEO Jensen Huang attended a $1 million per person dinner at Mar-a-Lago last week. For more, we're bringing in Yahoo Finance tech editor Dan Howley. That's a big dinner, Dan.
Yeah, I don't think they're serving Kraft macaroni and cheese there, although I pay $1 million for that. Yeah, this is a big deal. The H20 is a chip that NVIDIA is able to export to China right now. It's what DeepSeek trained their models on when it came to their R1 and their V3 AI, generative AI models. And so the idea that this would have been kept away from China was a big deal and up for discussion. There were both Republicans and Democrats saying that they wanted it to be controlled under the export controls. And so that would have hurt NVIDIA's overall revenue in China. Now, while they've said that they're not expecting any expansion, significant expansion, and that they will miss out over the long term because they won't be able to ship things like their Blackwell chips or their upcoming Vera Rubin chips, they do still have this in their back pocket that they're able to generate revenue from when it comes to China. So it's a big deal that now they're saying that they're still going to be able to, or at least the reports are, that now they'll be able to continue to hold on to that and continue to sell it for some time going forward. We don't know how long that's going to be or what exactly that means for NVIDIA's future chips. Don't expect Vera Rubin to go there. Don't expect Blackwell Ultra to go there. But the fact that they're able to have the H20 and perhaps future kind of, we'll call it nerfed high-end chips going out there, still good news for NVIDIA.
And more broadly, you've been following big tech's relationship with the president. And, this dinner, just one example of basically big tech CEOs paying a lot of money to get close to the president and trying to convince him of their agenda.
Yeah, I mean, look, this started prior to the inauguration. We had companies ranging from Google and Microsoft to Meta and Apple, either their CEOs or the companies themselves donating $1 million to the inauguration fund. We had them meeting up with him at Mar-a-Lago regularly. Mark Zuckerberg famously appointed Dana White, one of Trump's friends, and now reportedly purchased a mansion in D.C. close enough to talk, walking distance to J.D. Vance or the White House. But it didn't save them from the tariffs until about an hour ago, maybe, right? I think the big thing to keep in mind here is, we had Apple talk about $500 billion of investments over the next 4 years, Microsoft $80 billion over the next 4 years. It's funny that it's always over the next 4 years. Well, I wonder why. But the thing about Apple is the majority of their iPhone manufacturing is still in China.
And
Now,
so still subject to tariffs.
so that's the thing, right? You know, we talk about how Vietnam has a lot of manufacturing capabilities. There are other Southeast Asian countries that have manufacturing. Mexico manufactures Nvidia servers, so the ones coming through there aren't subject to the new tariffs. But you know, the clarity isn't there yet on which companies might get some exceptions. You know, Trump obviously just talking about that during the press conference.
As we wrap up this promising news, it's hard not to feel the excitement in the air. The stage is set for tech stocks to soar to new heights, with Nvidia, Apple, and other industry leaders poised for remarkable growth. It's a momentous time for the stock market, and the current state of these companies reflects resilience and potential for further expansion. Will you join the ranks of investors looking to ride the wave of success with these tech giants? Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.